I'm Allison Cossack, and we are live at the New York Stock Exchange. And what a day it's been already. And it's what, only 1:19 in the afternoon. It started out with a lot of drama this morning when we saw stocks fall a total of 7%. That put some measures in place called circuit breakers, where trading is stopped for 15 minutes so investors, so traders can kind of catch their breath and assess the latest headlines and the latest news in order to make the right trades. After that 15 minutes, it looks like those circuit breakers did the right thing, because we did see stocks shortly after bounce off their lows. But the reality is, what sparked that panic, those issues still remain. First and foremost, what happened overnight, the oil markets, oil prices plunging to levels we haven't seen, to prices we haven't seen since 1991. That's around $30, $33, $35 a barrel. Those are prices we haven't seen since the Gulf War. That spooked the markets because the concern is that could cause a ripple effect in the global economy if that hits the energy industry hard. And then, of course, you've got the worries about the coronavirus, the unknown impact of the coronavirus on the global economy, something that has been spooking the markets for 2 weeks. And even before those two moving parts, we had the one moving part of the global economy slowing down. So you throw all that together and you get that anxiety in the market that we've been seeing for weeks, something we do expect to continue. At the moment, we do see the Dow down only, and I say only lightly, 1,600 points. The real time to watch the trade is going to be from 3 p.m. to 4 p.m. when we will see if traders and investors need to shore up their bets that they've made throughout the day and try to protect themselves from the damage of this morning's trade. Let me bring in Alan Valdes. He is with Silverbear Capital. I'm so glad to have you with us. He knows these markets. You know these markets. What did you think about this morning?
Well, luckily we weren't shocked, because last night you have all the futures, you know, the technology now. We know where it's going to open at midnight. So we knew coming in it was going to be a bad day with the oil trade, with the virus still with us, with the 10-year trading so low. So basically, we weren't prepared for this. It was calm down here. There was no real running around craziness. It was just, opening trade. But like you said, where we close is the real important part.
Now, it's not every day you see the circuit breakers put into effect.
Well, in that respect, you're 100% right. I mean, last time I saw this, 11 years ago, when this bull market started, we actually bought in the last hour. And the S&P 500, it's up 465% cumulative since that time. So I'm not saying it's the exact day to buy, but we're starting to look to buy.
Okay, speaking of which, let me get to some questions that people are asking. Ariel is asking, do we expect this to happen all week? Is this going to get worse?
Well, no one knows. That's the problem. This is totally unknown. We don't know because of the virus. Until there's a vaccine, this definitely could get worse. It might get better, but I think it's going to just keep rolling over like we see. Maybe not this bad, because today was more on the oil trade probably weighing it down than the virus.
What about what the bond market is telling us? What usually happens when there's fear in the market, we see equity traders, stock traders, try to find safe havens. Bonds are one of those. The 10-year Treasury, everybody is saying it's flashing a red signal because the yield is 0.5% or below. But is it 0.5% below because everybody's piling in there, or because the fear is there, or is it both?
That's a great question, and I don't think we know the exact answer. People are piling in for sure. You run to that safe haven. We saw gold. Gold, which was $1,500 2 weeks ago, is now at $1,700 and change, and probably going higher. So you're seeing them move into these safe havens right now. But it's just, Yogi Berra, famous Yankee player, once said, there's the unknown and there's the unknown unknown. And right now traders are trading in the unknown unknown.
That's quite an unknown. All right, Luke is asking, are we heading into a recession?
I don't know. That's another tough question, Luke, because basically the market was strong. If you take away the coronavirus at the time this started, I mean, unemployment, if you look at unemployment numbers, it was, 173,000? If you take in the 2 months previously, all their new numbers combined, it's 400,000 new jobs added in 2 months. So it's a great, strong number, and we always like to see the consumer out there. Now we'll have to wait to see what happens now, though.
Okay, let's see. Chris is asking, how long do you expect this downward trend?
Chris, there's no idea, because we've never been here. the coronavirus has thrown a monkey wrench into all our looking at what we think we know, and we don't really know, and that's the problem.
A lot of unknowns. What Yogi Berra said, this is the unknown of the unknown. I like that. Is that what, did I say that right?
The unknown of the unknown.
Gregory is asking, should we hold on to our stocks or sell?
You know, Gregory, I think if you're in it for the long term, hold on. I haven't sold anything. I mean, you're probably a lot younger than me, but I'm still holding on. I'm watching the market. I think if you're in it now, I wouldn't go out and buy right away, but I'd look. If you see stocks you like and they're at a discount, hey, it's like going to Macy's and things are on sale. They're not going. It's not a going out of business sale, but maybe you'll get something 10 or 20% off.
Liz is asking what President Trump is saying about this. I'm going to ask a little bit further on that. What is he saying, and is he saying enough to give confidence to the markets?
You know, I don't even know if the president knows exactly because, like I said, this virus throws a monkey wrench into everything. He's trying to keep people calm, and that's a good thing. We should be calm. I mean, if you look at the raw numbers, so far, 23 people have died of the coronavirus here in the United States. And anything over 1 is a bad number, of course. But this year alone, 16,000 have died from the regular virus. So when you put it in that perspective, is this getting overblown? I don't know. I think it's too early to tell. But right now, 23 dead compared to 16,000, big difference.
So you think this is a little bit overdone? Do you think that traders are going to notice that it could be overdone if it is?
You know, again, I think they're watching the oil trade for one thing, and see how it gets worse. I mean, I think worldwide it's 111,000. That's still a big number, but here in the States, it's not bad.
Are investors at this point really pricing these stocks for a global recession? I mean, you know, there has to be a pricing of what could be in the future.
Right. So you always look ahead. You're 100% right. So right now we are pricing in probably a recession, and and now they have this where you're supposed to stay away from people and social, exemptory. And if that happens, yeah, exactly. And if that happens, what does that do in restaurants, in theaters, in retail stores? So it could weigh on it. But again, we'll keep an eye on the consumer. They are working. The jobs are more strong. If that happens, we're good.
Okay. Marco is asking, how will this affect my daily life?
Well, very little, I think. If you stay healthy, and you just clean your hands like the president has said, you'll probably be okay. And depending on if again, your age bracket, I would stay out of crowds, I'll be honest with you, but I think you'll stay healthy.
As far as the market goes, what could happen except obviously a vaccine, which we don't expect to happen at least for a year? What could shore up the markets where we don't see these wild swings and sell-offs almost every day?
Well, I think, again, if we see, especially here in the United States, if we see less people getting sick from it, if it seems more contained, some people say when the warm weather comes, you'll see less of it. I don't know. But if you look at factory workers in China, they're going back to work. So that production's going up. That's a good sign. We're looking at that. I went to a Christmas show for toys already, for the toy pricing at the Jacob Javits Center here in New York. And their biggest concern is the supply chain. But now you're seeing a little better supply chain. They're a little less worried now. So that weighs on the market. And if that happens, that's a good sign.
Okay, one last question. Hector wants to know, how do I protect my money?
Hector, you could give it to me. No. No. Listen, it's a tough call. I think if you're in it for the long run, I like equities. I like stocks that trade here on the New York Stock Exchange. I really do. But I like equities. Bond market, I'm a little worried about, but I think if you put your money in equities, if you find one you like, don't jump in today, but look at the market. You still got time. If it starts to go up, that's where you want to be.
Alan Valdes with Silverbear Capital. Awesome to have you on the show today.
Thank you, ma'am.
And thank you for watching. We will see you next time. They want me to keep going, which is great. Okay, I'll tell you what's happening around here. So since we've talked, the market really hasn't moved. I'm actually keeping my eye on the clock. It's 1:30. Closing time here at the stock exchange is 4 o'clock. That's when the closing bell is. I am going to be watching what many people call the witching hour between 3 p.m. and 4 p.m. That's when we can see the volume really ramp back up. Volume meaning the number of people jumping in to buy or jumping in to sell. The thinking is that the sell orders may outweigh the buy orders. As far as the traders, they're really just waiting around for that closing bell, and they're trying to keep their trades going today as we see the Dow dropping even more as I speak, 1,700 points. All right. Thanks so much for joining us. We'll see you next time. Oh, can I walk around a little bit? Would love to walk around. I would love to find somebody else to talk with. Could you go grab Einstein? No? Okay. Oh, 18 seconds? As far as people are saying what to do with your money, the best thing to do if you're in for the long haul is to really just stay where you are here and not look to sell. Because right now it's too risky to go ahead and sell if you're not necessarily a day trader. All right, I'm Sig out. Goodbye.